everyone. Welcome to another episode of The Good, Bad, and Ugly about real estate. I have a good friend of mine, Mr. Alonzo Guzman, and I can't get this thing to work now, of course. Let's see if we can do this again. Maybe. Come on. Oh my goodness gracious. Let's do this one more time. Forget it. I was going to do my audience clap, but it's not working for me this morning. Getting my technical difficulties here. I had it all set up. So thanks, Zoe, for coming on the podcast. I appreciate you taking time for me.
My pleasure.
Zoe is a OG private money gator. He likes to call himself OG old guy like me.
Okay. Yeah.
So I shaved mine off so I can still look a little young, but we're in the same team, same group. So Zoe, why don't you do the audience a favor and share your story with us? You know, what made you get into real estate? What made you decide to become a private money lender? And we'll go from there.
Yeah, 100%. And again, like I said earlier, Joe, backstage, appreciate what you're doing and allowing us to voice the things that we're doing and the platform. So, kudos to you and thank you so much.
Anytime.
Yeah, you know what? Honestly, my journey has all been by chance, and it's I don't want to get spiritual and philosophical or whatever, but it's one of those things where timing was just right. I wasn't looking for it, but I think because of all the good energy that I put out in the world in my private life, it just kind of came back to me in this, with this opportunity. But a little bit about me is I'm still employed. I have a W-2. I'm in sales and marketing. I'm a VP of sales for a national medical supply company. Managed over 20 mil, got about 15 reps nationwide. Been there for 26 years. Yeah, 26 years. So pretty much a big portion of my life. I am married to my high school sweetheart. Been together for 30 years, married 27. Got 3 beautiful kids. Well, kids, adults, thank you. And now they're having babies, so I'm a granddaddy for the first time. 6 months tomorrow. Yeah, it's the best feeling in the world. Like, honestly, it's the best feeling. So that's a little bit about me on the personal side. And the reason why I say that is because, I'm a W-2 worker. I also have a small business, a tattoo removal business that I've had for a few years. And that is what led me into the PACE world or the real estate world. And the reason why I say it is back in 22, when all that we think is happening now, or we've heard all the rhetoric of, the world was going to end, unemployment was like the recession was coming in 23, 22.
Right.
So for me as a small business owner, I was like, how do I scale? How do I keep my doors open? And how do I not get rid of my employees or lose my employees? Because like family now, like they're real close, close knit group.
Right.
So I went online and I'm like, okay, sales and marketing. I found Grant Cardone, his sales and marketing funnel. So I bought it. Say, can this help me scale and kind of just survive whatever the storm is going to come? Right, try to survive it. It didn't work for me, but the pace and the great marketer that he is, right, started just blasting my feed, just like Pace Morby. I'm like, who the hell is this Pace Morby guy? Like, he keeps popping in my feed. So back then there really wasn't a big push in marketing for Gator. It was real sub 2. Sub 2 was the mentorship.
Right.
So I'm going down that rabbit hole with Pace, all his YouTube channel and going through all that middle of the night, listening to videos. My wife was like, who is that guy? And I'm like, hey, don't worry, it's our future. I got this, right? So I'm like, so like the concept of creative acquisitions, creative real estate sub 2 was like, oh dude, like passive income. I can leave my job. Like, this is where, again, this is the calling, right? I didn't know I needed it. It just popped into my feed at the time. So then I called to join sub 2 and we were going through all that. I didn't join sub 2 just, again, because of all that I kind of explained, all the responsibilities I have. Like you said earlier, I'm a family man too. I love my family, so I devote time to them. And the kind of person that I am as well too. If we go to a buffet, if we spend $40 for a plate, I'm gonna eat about $150 worth of food. That's just like my mindset, right? Like, I'm gonna get everything out of it, right? So it's a good thing and a bad thing. Trust me.
Yeah.
But I know my character traits and my personality. So I'm like, there's no way I can do sub 2, my job, my small. There's no way, right? Something would have to I had to sacrifice something, and I wasn't willing to sacrifice at that point. So I kind of paused on that, and then Gator opened up maybe a few months or weeks later, and I'm like, you know what? Let me join this community maybe on the private money side. But still, I wasn't even thinking about private money lending at that point. I had capital, but I wasn't thinking about lending. I was thinking like, hey, I want to get the Airbnbs, I want to get the the rentals
Right.
and start the passive stuff, right? So then I joined Gator. Um, that was the end. That was I think it was September 22. I didn't really get active till about maybe December. Um, and my whole thing was like, okay, let me go to these creative people, these sub two guys, build relationships so that I can start, acquiring these things creatively. It
Right.
backfired. It totally backfired. So I don't know how long you've been in the community, but I've been in for 3 years. And when I tried doing that 3 years ago, there still was a very big division between sub two and Gator. Like it was like they were the elite, and we were like,
Right.
like welcome. You're at the small table, right, at dinner
Right.
kind of thing, whatever. So you had to work through all those kinks, and Pace did a remarkable job in unifying everything as he started bringing all his mentorships together. But back
Yep.
then it was just it was early on. It was like an upstart company, right? New company trying to figure it all out. So that kind of backfired on me. I'm like, damn, okay, well that sucks. I go, well, I'm in this Gator thing. I might as well see, get my money's worth out of this program. And then from there, it just took off. I just started bringing value. I just started branding and marketing myself. Again, doing transactions with wholesalers on the EMD side of it, because that's pretty much what the program was at the time before it evolved into what it is now, which is pretty much
Right.
just creative money. So we did all that, and then I remember April, and I still had aspirations then to join Sub Two, because I'm like, you know what, I want to learn this creative thing because I still want to get into the passive side, but I was
Right.
just too busy with everything going on. So I remember telling my wife, once I divorce my job, then I'll jump into Sub Two 100% because now I have the time to do it, right?
Yeah.
Um, Pace came in April the following year that I joined. He did his book signing tour. He was here in LA.
Yep.
The cool thing is I was able to spend more like one-on-one time with him because I know JJ Azizian. He's a good friend
Yep.
of mine here, and we actually were part of like the crowd control for the event, right? So I actually had like a job, and my job was like the person right after you meet the celebrity. I'm the one that ushers you out. Like, all right, get out of here, leave. Right? That was my job, right?
You.
So I took advantage of that because Pace was right there, right?
Sure.
Like so
Absolutely.
just chit chatting the whole entire time. And he basically told me, he's like, look, he's like, I told him my story. I still want to join Sub Two. I want to do this and that. He's like, look, Zoe, just focus in Gator. I need leadership in Gator. You can partner with my Sub Two students. Like, don't worry about like Sub Two. For one, that right there told me the character of the man, because he easily could have said, I want your 10 grand, 15 grand, right? No, he was like, no, just keep your money. And then two is, in my mind, I was thinking like, Pace, do you know how hard it is to do what you just said? Because I've been trying for the last 4 or 5 months, and it's like there's no way. They like in my head, I'm thinking that like, all right, I'm telling him, yeah, I get you. I'm like, but I can get there. Well, he knew in his head what he was bringing this thing to, right? 3 years, post that encounter. I didn't see it, and now I see exactly why. So yeah, I just pretty much listened to what he said. I took more of a leadership role in the community, help onboarding newer Gators, and just kind of giving them, just life lessons, things that I've gone through. Both like the title of your podcast, the good, the bad, and the ugly, right? So I can show them my scars so they don't make the same mistakes.
Right.
And then yeah, just kind of going from there. So um, I really focused in 23 about just being a private money lender, kind of like what you're doing now. Trying to 5-10x my capital so that I was cash heavy in 24 to be more on the acquisition side of it, right? As I built the relationships,
Right.
and then identifying my market. So I'm a private money lender, true and blue. That's my first, my first. I won't say my love, but my first,
Passion.
yeah, passion, or primarily what I look into do.
Focus. Yeah.
Um, and now I'm on the acquisition side of it. My market is Puerto Rico, so we're doing a lot of cool things in Puerto Rico. On the affordable housing side of it, whether it's affordable flips like what Pedro's doing, or bringing more doors to the locals opposed to taking doors away and market them to the outsider, right? So I want to really, I want to build that community up, like literally, as I've been trying to build up the Gator community figuratively. So I'm trying to be a community builder. But that's it, So now I'm tasked to do a lot more. I run the Orange County group over here and meet up in California. I support our sub two leaders in leadership with their meetup here in West Hollywood. I'm now the regional Gator leader for SoCal, so I'm part of the leadership side on that. I host Zooms with my team Tuesdays, Thursdays. We do underwriting for Gators, basic underwriting. We've been working with Carly, Jade, and also Sam to work on maybe expanding Gator Elite because there's a need there for Gator Elite, right?
Right.
And then I also host a regional Gator Zoom every Wednesday with other regional leaders, from the whole entire 50 states. So yeah, it's kind of my journey, and I love it. And with all that being said, what I love about this community from day one till now
Mm-hmm.
is that it allows me to be truly who I am. It's like I'm a people pleaser, and sometimes maybe it's a little bit too much where I gotta find that fine line to say no.
Right.
But I love helping people without expecting anything in return. Again, that's the reason why I'm here. Is I think I did that so much in my personal life, my private life, that God blessed me with. Hey, you have this opportunity to do better for your family when I was even looking for it. So I like to pay that forward and continue with that, and just help people, become successful and get to their, make their dreams into reality. I'm all about praising other people's wins above my own. Right, that's just the kind of person I am. I'm a behind the scenes kind of like back of the camera kind of guy, the producer, opposed to being the one in front. And even though I do a lot of that more direct in the Gator community and just trying to onboard and help people along their way. I know you have to do a lot more of that, like to market yourself or brand yourself. So even me, it's something new I got to work on, right? In the 3 years that I've been doing, and I'm not introverted at all. It's just, it's just not me. I'm not that big flamboyant, bam kind of guy, right?
Right.
But I love talking to people. I love networking and meeting people, making friends like with you, and just kind of seeing your story, your journey, and see how we can mesh and bring our superpowers together. But again, the great thing about this community allows me just to be truly me. Let my hair down. I guess figuratively, and
Right.
just be myself, opposed to being white collar corporate. And sometimes you have to be a little bit of a stiff, right? Here, I can just be myself and just and help as many people as I can. So that's my story into Pace's world in real estate. It was all by chance, brother. It was all like, okay, how do I survive what's coming? And I happen to stumble across this, and again, all uh, kudos to Pace and his marketing and his branding, because yeah, he just kept flooding my feed. I'm like, who is this dude, man? I don't even know this guy. Like, like this guy. So that's kind
That's
of
something to know about you because I think we basically got into Gator around the same time because I found Pace like August of 2022.
Mhm.
I decided I was getting away from watching the TV because it wasn't helping me make any money. Started looking at YouTube, looking for real estate centric type videos, and he just like you said, just kept coming up on my feed. Then I used to watch the Sunday service that he used to have, and then I think it was like October or November he reopened Gator,
Yeah,
and I'm like, okay, I'm getting in. I'm getting into that because I don't want. He said he's gonna close it again like he did the first time. I was like, I
yeah,
gotta get in there before he closes it, and then he never closed it, right?
yeah. I got
But
in September, and then yeah, they reopened in October. Yeah.
yeah, so um, enough about me. You mentioned earlier about being in medical sales. So
Yes, sir.
I learned this recently. So when you say medical sales, you're talking about like kneecaps, spinal cords, whatever, like medical appliances, right? Not medicine.
Yeah, so what we do is our specialty and our niche is urological supplies, so disposable medical supplies. So it's durable
Okay,
medical equipment, but more on the disposable, opposed to doing wheelchairs, either low end, high end, sophisticated manual. We can do all that, but we just prefer to just do the disposable stuff.
sure.
And then our market is that we cater to and supply is those that suffer a spinal cord injury. So those that are paralyzed, quadriplegic, or paraplegic.
Right.
Once you sever the cord or you damage the cord, you lose all your bowel and bladder function. Along with, of course, motor skill, motor capabilities and skills and things of that sort. So we supply them with their urological catheters so they can void their bladder and go to the restroom 6, 7 times a day. Because if they don't do that, they can have renal failure and have some really bad issues and pass from it just because of just the toxicity of the urine that's inside
Sure.
the body that has to get flushed.
Yeah.
So that's what we do. Yeah, we pretty much send a little brown box, with love every month to the end user. They get their supplies, they use them monthly, and we just do that on a monthly basis.
I just highlight that because it's so far from real estate, right? It's not
Yeah.
you really just don't really go together, but it's awesome that you anybody can get into real estate no matter
Hmm.
what their background is, and that's why I highlight it. So, you mentioned that you are one of the leaders in the Gator group. You host all these Zooms. That's how I met you. Is I think it was on a Thursday Zoom, and can you come up with something that's a common theme that a lot of private money lenders are coming to you asking you questions like, is it more how do I structure? How do I secure? Basically the biggest thing is protection, right? How can I help make sure mitigate the risk of lending money? Because I think you and I both know that in our community there's a lot of gators who may have not listened to the instruction of how to lend money or utilize the documents that they should have done, or maybe not want to use a TC. So, what are some of the? Because I'm sure there should be some gators that watch this, right? Or some private money lenders that are not in our community. What would be some words of wisdom that you may want to share with them about that?
Yeah, and that's a good point, and I'll bring up a lot of uh, the questions that are asked in our underwriting Zoom, because it
Yeah,
tends to be like the same thing, and it kind of goes to your question. Um, I get a lot. Well, what I do is I'll back it up just a little bit. So what I try to tell these New York Gators is and we say it, and everybody says it, don't chase the shiny object. Everyone's always fascinated about the possibilities and the probabilities of the return, right? Okay, they're going to give you 40% in 2 days, and you're like, oh my god, like this is
great.
a
It's
unicorn. I want to take it. Yeah, you know what? And are there the deals out there? Yes, they are, but that's why I want to take it back a step is like, but it comes with reputable, like solid individuals and operators that are bringing this opportunity, and those opportunities are just one of those anomalies where like, hey, bro, like like most developers and most investors, most of them are land rich and cash poor, right? That's just kind of how they are, right? So a lot of their money is in deals. So they might come across like, oh my God, I got a gap at Bridget. Can you come in? And they're dealing with larger dollar amounts. To them, 40% really is a buck is really nothing. They don't walk over dollars to pick up pennies, right? But the
right,
reason why I say that is that those are the anomalies. Those are the very small, and you got to build relationships with people. If a random comes to you and says, "Hey, I got this deal," that's a huge red flag. Like don't get enamored with what the possibility is of 40% because you're not going to get it for one, and two, you're going to lose what you gave him. That's number one.
yeah,
So I always tell them like we have to just take a step back. Um, don't make somebody else's urgency your urgency. Like I had a deal that was brought to me, and this is something that I'm doing a lot. It's a more of a high end transactional land component that I'm scaling out, where we're living in escrow and leveraging escrow so that we can provide a service to the borrower that needs our service, and then of course acquiring a hefty fee for doing it. But money never leaves escrow. So it's more like an escrow seasoning. It's more like there's different terms you can use for it. I use liquidity sponsorship, but you can do POF, whatever it might be. But the money is housing is staying in escrow. It's totally transactional. Well, they came to me and said I need a million bucks in escrow um, because the I think it was the partner, the lender. I forgot the construct of it. Basically, the money was going to be in escrow for 2 or 3 weeks, and they were offering 50% for a month, right? And money never leaves. And I'm like, okay. Those are the kind of things that I do. I want to use my own title company. Here are my fees. Here are my this. Here are my that.
right,
They wanted to change things, but again, the reason why I say that is you have to be comfortable with your land box, and you have to stay true to your values and your cores, right? You can't deviate if they say they promise this and promise that. You have to sit there and not let. He said, "Well, I need to fund it tomorrow." Like kind of, it wasn't really tomorrow, but you know what I mean. Like it was a real urgent need for it. And I wasn't going to deviate from it. Like that's just who I am. Like I go, I need my time to do my proper due diligence, not only in the opportunity, but also in all the players. I need to see who I'm working with, right? I need to talk to you guys. I want to jump on a Zoom with you guys. You're just gonna text me through Facebook Messenger and say I need this money, and oh, okay, well, you seem all right. Let me give you $1 million. No, it's not gonna work that way. Like I want to meet the person. Like I want to have this interaction. If I can't have this, and you might be a really solid operator, but if we can't have this and have this face to face, that's for
right,
one. That's one thing that I won't even move forward with because like how can you not show your face to me if you're asking for that kind of money, right? You're trying to get to
Right.
third base in this whole entire Gator dating scheme, but you haven't. I don't even know who you are, right? Like that
Right.
just doesn't work. And again,
Got
I'm
to
not
want to
saying
me first.
yeah. And again, so my point is like I tell a lot of Gators because their whole thing is like, is this a deal? Is this a deal? And they only bring things to me that the numbers seem really juicy. The underwriting is the underwriting. The black and white and the analyzer will tell you whether he's over leveraged or not. That's the easy part. We can analyze the horse all day, but I really like to focus on analyzing the operator, like the jockey. I really want to see who that person is. Like, and that's why I tell people just take a step back, relax, take a deep breath. Just because they brought it to you, and then you funding tomorrow doesn't mean that. Um, for one, it's probably not 99.5% of the stuff that we see is not really good. It's not going to get funded because if they're coming to the 11th hour, why could if it's really a great deal, why didn't they fund it from day one? Right. That's kind of what I tell
Exactly.
people. Like if it was that good, man, it could have got funded like 2 weeks ago when it first opened.
Yep.
And again, and don't get like all like worked up, like, oh, this is the only deal I'm going to get, because they're so caught up in, especially in our group, is they're trying to compete, trying to compete and compete with the Joneses, right? And they see
Yep.
all these other people showing successes, and they're like, "Damn, I gotta get a win." And that's the worst mindset to have because you drop all your guards down. So that's the biggest thing is like, hey, look at is this really a good deal? And then that's the great thing about the underwriting team is that we'll analyze it for you from the jump and say, hey, look at you know what, these are all the red flags that we see, and that's more on the deal side of it. But I take it one step further. I like to always underwrite the operator and see what they're all about and see who I'm doing business with because you're really entering a JV with these individuals. You want to make sure that they're of your standard, right? People that you want to work with.
Awesome. So, you talked about people giving you that high return. Um, One, I agree with you on the two, like a 2 day turn, or even tomorrow I need to close. If it was such a great deal, why didn't you come to me when you got this deal or under
Exactly.
contract 2 or 3 weeks ago? If I had my time to do my due diligence, like you said, urgency on your part is not urgency on my part. I'm gonna do my due diligence, and if I need more than 24 hours, then I'm gonna take it, or I'm just not your lender,
Yeah.
right? Because that's when you get yourself in trouble when you're trying to make something happen that, and you're outside of your requirements of time to do your due diligence. One of the things I wanted to ask you is, I know when I first started getting into the private money lending, is understanding usury laws. In your coaching of the Gators, have you had come across where people are like they got in trouble or have borrowed or lent to people that kind of use that to their advantage?
Knock on wood. It's like it's like the due on sale clause. It's there, but it
Yeah.
hasn't been called right. Usury is a concern, of course, because the ramifications and violating usury law, dependent on the state, right, is not good. But
Right.
a lot of it has to do is if it's going to be called on you, right? I think a lot of what we do, and again, I always kind of like give this disclaimer when I go to individuals, like what Pace has taught us is just shows us the opportunity and he gives us a blueprint of how to do certain things, like the documents that are in our Kajabi or are available to us are
Hmm.
basically just templates. Like you have to take these to your attorney in the state that you're going to and modify those according to the state laws, right? And things
Right.
of that sort. So I want to throw that out there because right away it's like, well, Pace gave me, yeah, he's giving you a lot of information, but everything is state by state, municipality, local government. Things are changing. Things that just he doesn't control it. Things happen, right? Things change. There's reform and ordinances and stuff. So that's the
Right.
one thing I always say is take what you got, show it to an attorney, but always consult with an attorney because at the end of the day, if something like this were to be called usury law, you're not going to call me to help you with the defense. You're gonna need an attorney to do that, right? So make sure you
Exactly.
show them everything so they know how to defend you in the case that a usury is called. But to answer your question, I haven't seen anybody get called on usury. It's there. I think it's very, I think it's a concern that we all need to look at, make sure your paperwork is in place, and like I said, consult with an attorney before going into a state that has very like California, like here is very strict when it comes to usury. I think here
Right.
they only got 10% annualized, even noted, because there are some states that will they have a fixed number or percentage allowed if it's not noted, but if it's noted, then basically it's like whatever you guys agreed upon is okay, because you guys went into an agreement. But here
Right.
in California, it's strict. So what we do over here is we go with the SPV structure, which is basically just a special purpose vehicle LLC, basically, and we technically go in as partners in the LLC. And in the OA, what we do is we specifically designate everybody's responsibilities in this partnership, as it should, right? Okay, this group is coming in as the money partners. This is their responsibility. This is their take. Yada yada yada. So we structure a complete OA operating agreement as if we are truly coming into a partnership into the opportunity.
I appreciate you saying that. I heard you say OA. It's like, let me make sure people understand the lingo because some people
Yeah.
may
Oh
not
yeah.
know OA operating agreement. And
Yeah.
then you use, I think it was the SV something. It's a special
SPV.
vehicle.
Yeah. Special
Yeah.
purpose vehicle. Yeah. Basically, it's a way to syndicate and raise funds using the LLC structure.
Right.
Yeah, where basically we come in, and we all come in as one. But the one thing is, a lot of people use it loosely. So they use it because, okay, yeah, you're into an LLC, but they don't go into the weeds and really have it specified in the OA what everybody's responsibility is in that OA, because they can call it operating agreement out and say, okay, well, yeah. Again, right? It's a shell. You have this thing, whatever it is, and but if you go into the specifics, your attorney will look at it and say, yeah, we came into this operating agreement as the money component of this transaction, and it's
Right.
stipulated and stated in the OA. So make sure you get into the weeds with your details, like Pace says, right? The what ifs, the what ifs, the what ifs. You got to put all the what ifs in there, like you do.
People don't think about it until after it happens, right? And then all of a
Exactly,
sudden it's like,
exactly.
oh damn, I wish I would have done that. Or
Yeah,
you mean the contract didn't cover me for this?
yeah,
Did you not read the contract?
yeah,
Did you not read the agreement?
yeah.
Yeah.
So there's
So
creative ways around it to do it, right? And again, but with that being said, I'm not an attorney. I have no legal authority. I'm not giving legal advice. Consult your attorney into this. Consult a state attorney in the state that you're actually doing the lend on, so that you can have an understanding of what the risks are, and also
sure.
have someone knowing, what it is that you need to do to protect yourself, and then you have someone there in case, God forbid, it is called, and you have to, go out there and defend yourself.
I'm a big proponent of using a transaction coordinator when I do my
Mhm.
my lending. Do you do that same thing?
The great thing is within my group, I have actually three TCs in there. Our primary one and two others. So yeah, where I'm blessed to have a friend, and also who is a TC, who is a top tier TC, and is actually he's in every one of the mentorships, sub two Gator and all that good stuff. So he understands everything, all the complexities. But yeah, 100%. And I say this also just going back to my past 3 years ago. When you were doing EMD deals, there really wasn't any Gator specific TCs out there. There was more just on the sub two creative, acquisition side of it. So we were
Right.
doing a lot of our own TC work early on. Like I was doing my own TC work. I was calling Title, hey Title, this is who I am. Okay, that was, yeah, and it's a lot of work, right? And then we
Yeah.
were doing a mutual release back then because we didn't know that there was this mutual release clause in certain states, and we were finding out, by going into bad deals, and realizing,
Right.
oh my God, there's mutual release. So yeah, highly, 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 highly recommend consulting and getting a TC on your and getting a TC on your side, because I got a lot of people that come to me and say, "Oh yeah, they got a TC, they got a TC." That's cool. That TC is working for them. Get your own TC, because there
Exactly.
might be something that TC's, it's just like lawyering up, right? If you have a lawyer, that lawyer is going to take protect his client, as you should get a lawyer to protect your self interest, right? Your best interest.
Yeah.
The same thing with TC. That's your person, opposed to relying on someone else who might have a biased approach to the transaction, right? So
Absolutely. So the title of my channel is the good, bad, and ugly. Can you share with the audience, a good story you've had that like this is a win for me? I got to help a lot of people, and then one's like, yeah, as a private money lender, you try to do the best you can, try to protect yourself, but maybe you lost some money or you were in a deal that went bad, but luckily you were able to pull your money back. Can you share a story like that with us?
yeah, for me, all the goods for me are actually all the bads. So I run with and then the reason why I say this is because I'm a very competitive person. you know? So
Sure.
for me, a loss is not really a loss, it's a learning experience. And then I'm always like, okay, well, I lost $1 today. That means the next time I'm going to make $2. That's just like my mindset. That's my
Yeah.
motivation.
Yeah. Yeah.
And the creed that I run by is, I don't lose. I either win or I learn. And that's kind of how my mindset is. So like some of the bad ones have turned into good opportunities for me because it allowed me to focus and go deeper into the why did I lose,
Yeah.
and see what I missed and like, okay, there it is, right? That's where I dropped the ball there, and I
Yeah.
made a mistake, so that I don't make that same mistake. And then also, I'm very, very transparent and very vulnerable and very open to showing my scars to any new gator that comes in. Like I don't mind telling you, yeah, I messed up here. I did a boo boo here. I didn't
Yeah.
listen to the things that I told you. It was just one of those days, right?
Yeah.
And I think that's more of a learning experience and as much needed in the community than just showing all the wins, because the wins I think lead people maybe down a path that they're not ready for, because again they're trying to keep up with the Joneses and they're trying to like I got to make a win. Everybody is winning, right? No one, but when they post that win, no one tells you about all the failures and what it led or what it took to get to that win, right? They don't see
Exactly.
that part of it. And so that's my biggest thing. So just if you want to get specifics, there was a rap deal that we funded, me and my brother-in-law. um, I won't go into details and names, but it came from a very highly
Respected
I won't say respected, but
or
marketed
known. Okay.
individual. That he was the man of raps. Like he was like the rap master, dude. In my phone, he's still in there as the rap master. That's how I noted him, right? So
And just for the audience, the wraps are there's an
yeah.
existing mortgage, and then you wrap it with a new mortgage around the existing one.
Correct.
So
Yeah, I was. Yeah, I wasn't. I was just on the money side of it. I was getting the arrears all caught up, getting everything all taken care of, so that we can get a creative sub to get under contract, and then when the homestead or the penalty box buyer, the actual individual buying it, drops their down payment, that's how I wasn't getting my money back, along with whatever fees that were promised. And again, it was going to be I think it was going to be a mirror wrap. So basically, we were going to get, or more like an equity wrap, where there was an equity play in it, the way how we structure it. So we get some
sure.
mailbox money. So I actually like the whole wrap concept, right? I love the whole concept. It makes total sense.
Right.
Especially with some of these homes that were acquired at 2.9, 3, like these very low interest rates. So I totally like the concept. So I believe in that. It's just, again, I didn't do my homework and due diligence on the operator. And that was a problem, because he came recommended to me by someone that I respected and I revered. And so many of my peers were doing the same thing. I'm like, oh, this guy's got to be good. Like, he's got to be good, right?
Yeah.
He's being recommended. He's the rap guy. He's the rap king.
Yeah.
So I went in, dropped my guard, just went off of that. I invested. We acquired it. Then I found out later, well, a lot of us did, that he got a little overzealous, and he scaled too fast, and he wasn't marketing these properties. So he had a
Hmm.
lot of properties that were being marketed, and we were still paying the mortgages, and keeping everything going. And then again, to kind of find out that pretty much like the deal was dead. Like, no one wanted the properties. And I basically, what I did is I actually deeded the property back to the owner. Like, I didn't want it. Like, that's what I tell a lot of people too, is like, is loan to own, and also loan with the understanding that, for one, you're going to lose your money. So you gotta understand that. Not to say you are, but you gotta be okay with that, because that's the worst case scenario. You lost your money. And if you're okay with it, do the vend. Two is the market. Just because they're offering you a 45% return in 2 days, and you did all the due diligence, the guy is good, he's legit, all that good stuff, but it's in Montana, and no disrespect to people in Montana, but it's like not a very desirable market, where it's going to be harder to dispo and get rid of it. That if this guy doesn't perform, do you have the capabilities to go in there and just plug in and finish the flip and get it sold, right?
Right.
If not, you're going to hold that property. Do you want a property in Montana? So you got to also understand. You got. These are the things that I learn as I make the mistakes, right?
Sure.
So yeah, I do. We do everything that we can in securities with deed of trust, a lien position, all this collateralization. Again, for the what if he doesn't perform, we really don't want him to not perform, because we want our capital. Nobody wants. We don't want the asset. I mean, we really
Right.
don't want the asset. The banks don't want the asset. They want their money, right? Um, but that's what we do to protect ourselves, and that's the end result if it doesn't perform. So I have this property in Dallas. Lawrence was, not desirable. I didn't want it. Then I looked deeper into it. The interest rate was like 5.6. Like, what the hell
Oh
was I
wow.
wrapping a 5.6? Like, yeah, again, you don't know that. Like, just I'm like. So you go into all this, right?
Yeah.
But I wasn't looking at the details. It was more like, hey, this guy does a lot of these. You wanna invest in this with this guy. So that's the point that I made earlier, is like, I turned that into, okay, what did I miss, where did I make the mistake? Okay, yeah, 5 6, hell no, I'm not gonna, that market, no, I'm never gonna do that market again. So I just kind of honed my skills a little bit, so
Right.
that when I see an opportunity, I know what to look for now, opposed to just going off of recommendation or things of that sort. So yeah, but I still love the rap concept. I really do. I like it a whole lot. I like the whole concept. So the cool thing about me is I'm stubborn, I guess, so that when I have a loss, I don't be like, okay, well, I got PTSD, I'm gun shy, I don't want to do it anymore. I'm like, oh no, I want to get deep into it and see what the hell happened, where I made the mistake. So again, so I don't make that mistake again, because I'm stubborn. And then
Sure.
also, I love then now pass that information on to others so they don't make the same mistake. And then again, I realize too is that if you're going to go into a rap and a land, y- like the rap exit shouldn't be like like, okay, if I can't do this, I can't do this, I can't do this. This is my fourth exit. We'll just wrap it. No, no, no. It doesn't work that way. The wrap is a very specialized, nuanced kind of exit, right? You got to have an
Yeah.
operator who knows how to do raps, is putting money in the marketing to get these things dispoed, is not all over the place. They focus like on one or two markets that they know, right? Because the,
Yep.
the buyer is very specialized. It's not like anybody. Hey, yeah, I want to buy. No one's gonna buy a 9% wrapped home, right?
Nope. Nope.
So yeah, just there are a lot of things. More there's it's more for a penalty box buyer. So again, if you're gonna do them, go with groups that have all those things in place, and that's like their primary exit is like we do wraps, right? That's what they focus
Right.
on, because they know all the little intricate pieces to the whole entire process. But the wrap, I love it. I love the whole concept. It's just, yeah, I just let my guard down on that one, and I got
We
burned.
all
And
do it. It
yeah,
happens.
yeah.
So, one of the things that I don't do, and just to ask a question, if you do, are you okay lending in second position, third, fourth, fifth position, or do you like, nope, I only do first?
No, we'll do two. I won't go anything beyond two. So 3 and 4 is pretty much kiss your money goodbye. I'll do two, but again, that's where the underwriting comes in. So if we vetted and underwritten the borrower, he's a good guy. He's got HUDs, he's got history, he's got a credibility package. We like him. Everything is, he works. He's above board, and we just jive, right? Then we'll break down the deal. And then that'll tell us whether he's over leveraged, bringing someone in a second, all that good stuff. So, yeah, we do it. But again, we have very strict criteria. If we come into a second, what we want to do, and what we need. We really focus on, the MAO, which is, max allowable offer. Basically, like, okay, for this to work, he's buying it at whatever. For us to come in a second with a little buffer and leverage to know that we're safe, he has to actually buy it for this much, right?
Right.
So we'll go back and say, look, if you want us to come in, you're gonna have to renegotiate your price. This, oh, I can't do it. Well, then, sorry, you're over leveraged. We're running too much of a risk to come in a second.
Yep.
So yeah, I mean, we do it, but that's where the real analyzing of the deal comes in place. Where you break down the black and white, the I's and the T's, dot them and cross them to make sure that there is enough meat in there, so that not just that we can make our return, but also that we can secure our capital. And God forbid, in case of a non-performance, and we have to take the property over, take care of the first, and there's still enough meat so to take care of our money as well.
Absolutely. So one of the things to kind of share with the audience, because it's something that after being a gator I learned, is there's a difference between a private money lender and a private money partner.
hmm
Do you offer both services, or are you strictly your private money lender?
Right now, I'm more of a lender. Um, I think when I get into a position where I have capital sitting and I need somewhere to put it, and it makes more sense to put it in a longer hold, uh, um, in comparison to where I have it now, making pennies at a bank than somewhere else, it makes total sense, right? But
Sure.
right now, my money is more intermittent. It's more, I want it in and out, right? I'm just trying to grow it.
Absolutely.
So that's more on the private money lender side of it. And like my sweet spot for me personally, In my personal investment, if I'm going to invest into an opportunity, it's 4 to 6 months. You know, I
Yep.
know now just with the market corrections that are happening, flips are taking a little bit longer. Things are on market a little. So I get that, understand that. So I always put in a little buffer anyways. If someone telling me 6 months, I'm like, okay, I expect to probably be out in 9, right? So I set that expectation for me.
Yep.
And then of course there's always contingencies, in the agreement, to incentivize them to perform and get out on time. And if not, then of course there's going to be some penalties for doing so, right? But yeah, I prefer to be more of a primary lender right now. I think when
Yep.
I get to that more partnership role, it'd be a good thing for me. That means that I have, an excess of capital that I'm happy to put into a place and let it sit for a year, 2 years, 3 years, or whatever it is, and get an equity stake and be a true partner in the deal, making more money than again in that investment opposed to where I have my money stored now, right? So.
Yeah, absolutely. So a couple questions. You mentioned about trying to incentivize them to get finished earlier and then penalty. So that's one of the things that I failed to do as far as the penalty piece, right? So do you do like a sliding scale? Like if you get done in month two, will be the rate. Month four is this rate. Month six is that rate. And then let's say the term is supposed to be 6 months. What do you do, a daily late? Do you do a weekly late? What is it that you usually charge?
Yeah, so what we'll do is we'll just do a breakdown of the actual so it's a daily rate, and then we break down basically what our fee is during this. So if it's 6 months, we'll break down what the daily rate is at that point, and that'll be the rate going on further past the 6 months or whatever the term that's noted. Again, I know we know things happen. It's all about communication, right? We're
Right.
partners in the deal, so we're like, okay, look at what's going on. Communicate with me. Okay, that happened. Awesome. Show me proof of it. Okay, I'm very open, right? That's why I said in my head, if they tells me 6, I'm in my mind saying it's probably gonna be a 9 month project, right? So I already know, that my money's gonna be out that long.
Right.
But yeah, we do late fees, and sometimes what we'll do is if we go into like the SPV or LLC structure, what we'll do is we'll say, hey, look at okay, opposed to charging you a late fee, what we'll say is our ownership in the OA and the LLC will grow to a point where now that we have majority ownership and voting rights, where at that point we'll kick the individual as non-performing out and we take over the asset without going through the foreclosure process, which we know is lengthy and also costly. We have the asset already in hand because the asset's going to be in that LLC that was put in place to house it, per the project. So that at that point we can take on the project, finish it, complete it, or just say, you know what, let's get rid of it and just get our capital back. So there's different ways, depending how you structure it. There's different ways and models to incentivize and capitalize, on things. But us on the traditional side would be more of a daily fee, just to scrapulate it out, and okay, it's going to be this much for the additional month, and then maybe we add more on that on month 2, month 3, and month 4, but it's more of a daily type rate because it's again your money, the 6 months. So the rate that they're giving you for a 6 month, say a 6 month project hold, is for your money for that 6 month. After that, you don't want to reward them for being late and not charge them something hefty because your money could be in your pocket or in another project making money. So if you
Right.
don't sit there and have those incentives, you're basically rewarding them for being late. Like, okay, well, it's free money for them. No, 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 you're going to pay, a lot more. And again, I don't want to get there. That's why I call it an incentive. It's not really a penalty or a fee. It's more an incentive. Like, bro, I don't want you to pay top dollar. Like, get finished when you say you are, so you can
Yeah.
avoid, paying these fees. But if you go there, I understand it happens, but this is what you're going to pay for.
Right. So if somebody wanted to utilize your services? Um, what would they do? Like, what do you need from them in order to come to you with a deal?
Okay, so yeah, if you're looking for a deal to be funded, it's pretty simple. If you're in the community, bring your deals to our Zoom. We'll actually underwrite it for free and live, on Tuesdays and Thursdays. And if it's something that seems like there's a possibility and potential there, we'll continue with it, off the Zoom and get you all patched in and we'll help you, if you're connecting it or if you're going to fund it yourself or you're looking to wrestle. We can do all the structuring for you, negotiation, even raise the capital for you. So you can do that, or just jump on my Blink. I actually have a portal there that you can submit your deals there. And then the group that actually does the underwriting on Tuesdays and Thursdays is the group that actually will take a look at the submissions and underwrite it as well. So it's pretty easy. Just submit your deal there. And if you want to be a money partner, someone who has capital and is looking to partner up with, a team that is seasoned, that knows, what they're doing, is going to teach you how to fish along the whole entire process, which is what we do.
Right.
Excuse me. You just sign up as a money partner. We'll get you, into deals that fit your lend box. We'll present those to you, and you can make passive incomes. But again, our whole objective is just not just to feed you the fish. I want to teach you how to fish. So we want to take your passive approach more into an active approach, because we want you to learn how to do all that we're doing, so you can go out there and start sourcing your own opportunities and your own deals. But there's
Right.
different ways of doing it. There's people, again, like myself, that works this and that or whatever, has capital. They want to do this, but just they really can't make that switch just yet. But they have money that's not making money where it's at now, and they want to make, more. We have those
Right.
passive investors, but we have those that actually want to take this to the next level, which I love, because now they're more engaged, and we'll teach them the process. And then, hopefully soon, after a few wins under their belt, they're ready to go out there and do it on their own.
Awesome. So let's say somebody's outside of the community that's watching this.
Mhm.
Your Blink card is the best way. Instagram, Facebook. What's the
Yeah.
best way to do you?
Blink card's the best way to communicate with me. My cell phone, I'm old school. Just send me a text. Hey, what's going on? And we'll jump on a call. I'm very accessible there. And then on the socials, I prefer Instagram. That's kind of where I'm doing a lot of my outreach to outside of the community. I think my Facebook has been more geared towards, the Gator community and things that are happening within our community.
Right.
Instagram is more for the outside world, and that's where I'm going to do a lot more of my marketing when it comes to, like, the projects in Puerto Rico and things like that. And as I start ramping that up or whatever it is, so my Instagram handle is Zoe Knows. It's a Zoe underscore knows underscore, and just, yeah, search me out, and you can't miss this ugly mug. You'll see my picture when I pop up. So, oh,
Well, I want to add more value to you. I just had a guest on. Her name is Nisha Hyde. She's actually moving to Puerto Rico.
I've spoken to Nisha. We've had
Have
conversations
you?
about that. Yeah, yeah, yeah.
Awesome. Good. So I'm glad you guys did that.
Hmm.
Well, I want to thank you, Zoe, for giving me this time. You dropped a lot of nuggets for the audience to kind of chew on and understand what private money lending is, and some of the nuances and do's and don'ts. I will have your contact information, your bling, your Instagram in description. So if you want to reach out to you, and for the audience, this episode will not only be on YouTube, but it'll also be on Spotify. So Zoe will be Spotify famous.
Oh, nice.
And yeah, until next time, see you later, fam.
All right. Thank you, Joe. Thanks, everybody. Appreciate it.